bank reconciliation is the physical process of recognizing and noting the differences between the cash balance recorded on the bank statement and the cash balance displayed on the company's cash ledger T account. Bank reconciliations not only confirm and update the accuracy of both the bank and the company's cash records, but also determine the actual cash balance that should be recorded in the company's balance sheet. Cash is an extremely valuable asset to any company. Cash is transportable, exchangeable, and almost untraceable. This makes it very easy for cash to be taken, concealed, and converted into other assets with little detection. Companies keep a majority of their cash in a bank for more security and a lesser chance of theft. Bank reconciliations compare the bank and company's records of transactions to properly reflect a company's cash balance. There are 3 key steps in preparing a bank reconciliation. Firstly, the bank balance presented on the bank statement is reconciled to the actual cash balance. This is done because the bank balance often differs from the actual cash balance. Deposits and payments made by the business sometimes don't appear on that month's bank statement because they are yet to clear the bank. These deposits in transit, however, are now in the account and need to be added to the bank balance. Outstanding checks need to be deducted from the bank's cash balance, as that money has left the account after the month's bank statement was produced. The bank sometimes makes mistakes recording transactions. In these situations, amounts may need to be added or subtracted from the bank's cash balance. Secondly, the book balance in the business's accounting records are reconciled to the actual cash balance. This is done because there can be discrepancies between the bank and the business records. A credit memorandum occurs when the bank collects cash on behalf of the business, often through interest revenue or accounts receivable. These transactions need to be added to the company's book balance. Debit memorandum occur from bank service charge fees or checks that are returned for insufficient funds. These transactions need to be subtracted from the company's book balance. Companies may mistakenly over or understate amounts of checks they have previously recorded. These also need to be added or subtracted from the book balance. The resulting cash balance should be equal to the actual cash balance adjusted from the bank statement. The last step is to reflect the adjustments made to the company's book balance through recording journal entry. For credit memorandum, we always debit the cash account and credit the account recorded on the reconciliation by the corresponding amount. For debit memorandum, we always debit the accounts presented on the reconciliation and credit cash.